Yeah, the Fed matters more than ever, but not in the evident ways that we used to see in terms of interest rates and how that translates into what we're paying on credit cards and home equity lines of credit. Instead, the Fed's significance is that they are keeping credit markets functioning. They've rolled out a bunch of programs from the financial crisis in 2008, as well as innovated in some new ways to keep credit flowing to various sectors of the market. So the fact that somebody can even get a mortgage now is because the Fed has acted aggressively buying mortgage-backed securities and keeping credit flowing. That's just one example of what action the Fed has taken to keep credit flowing. And that's important because without that credit flowing to various sectors, there will be no economic recovery. I don't know that they're going to take any specific action. I think instead there's going to be a lot of talk about various aspects of the credit markets and what they're doing to make sure that it continues to function, and just really underscoring some of the phrases we've heard them use again and again, that they're not out of ammunition, that they will use all of their tools to keep the economy functioning and make sure credit is available to businesses and households. I think that's really the main message, and that is really the most significant action the Fed is taking, is keeping that credit flowing. Well, mortgage refinancing is at a frenetic pace right now. Mortgage rates are near record lows. So that's the one area where I think consumers can benefit now in terms of being able to reduce monthly payments, create a little bit of breathing room in the budget. In terms of those low rates that are designed to spur borrowing and spending, that's really not going to pay dividends until we're in economic recovery mode. Nobody's going to go out and buy a car now just because interest rates are low if they're worried about losing their job. But we get to the other side of this. The economy is reopening. Consumer confidence is starting to come back. People are less worried about losing their job. That's when having that backdrop of low interest rates is going to be beneficial to both consumer and business spending, the type that we're going to need to reflate the economy.